Hello, Jim here. April was one of my wildest months for trading options. I had lots of assignments. The market hit new lows and then recovered rapidly late April. I'm going to share with you how I did that month, how I dealt with a lot of the early assignments, and overall what my picture looks like now. So stay tuned. I think it's going to be well worth your while. Now, I'm a firm believer in trading options, especially selling options. It's a great way to make a significant amount of extra income. But there are those times, those months, or sometimes several months that really try your patience. April was one of those times. The market started downward trending in as early as February. I believe it went down some in March, but April, it was kind of in free fall until about the early to middle of April. A lot of it coincided with Trump's announcements related to tariffs, his Liberty Day, or whatever, I believe he called it Liberty Day. But we did get a very V-shaped recovery. So we hit lows in early to middle of April, but by late April, we have recovered a significant amount of those losses. And since then, we've completely recovered. I do believe yesterday, earlier this week, we hit new highs in several of the indices. But today we're down, and it's still been a little bit choppy the last day or two. And I do think that's going to continue. But today I want to talk about when you do have these kind of months that really try your patience. I had my first one back in 22, and I believe it was 2 months where I had a lot of things get assigned to me. What I learned during the process is to keep trading, keep your strategies in place, and then kind of learn from the experience. So that's my goal today, is to share with you what I learned from my most assignments ever this past April, just literally 2 months ago. I had over 11 assignments. A lot of these are really good companies. They're not cheap. I had some that were over $200 and several contracts, but I was able to manage it. It did get a little bit crazy. I did have margin calls that I also managed. But overall, now I'm looking back a little bit over a month and a half, and I've hit new highs. My accounts are doing really well. So I'm going to share with you all of that. I'm going to share with you what my April trades looked like, how I ended up with the month, and I'll go over each of those assignments and why I did what I did when I made those assignments. So you may ask, well, how's my account doing so well now? It's mainly because the companies I have picked recently have been better companies, and they performed better than some of the previous ones. It also gave me an opportunity to kind of, clean the account some, get rid of some companies that maybe not have not done as well, like Polaris. I did sell some of my Polaris in my IRA. I also sold some other companies like Path. I believe I sold all my Path, and then a few others. And then when things were assigned, I also managed each assignment. So, but I did get margin calls, and I did have to manage the margin calls. So you may ask, well, what is a margin call? It's just you don't have enough cash in your account to cover all your puts. Now, not necessarily your cash secured puts, because in some ways they're a little bit safer when you're dealing with these kind of events. It's more your spreads. It's the instances when they give you credit for your long put. Um, they look at that amount and they determine, well, how much cash do you have available? Will it cover all your positions getting assigned to you, or would you run out of cash and you'd have to put more cash in? And they set up what's called a margin call. Each broker, it looks a little bit different. For Fidelity, my biggest mistake is I had way too many positions in my IRA. So it was just one account that I got the margin calls. It was my IRA. What was unique or interesting about Fidelity and the way they did it is, I believe when I came in on a Monday, I had 2 or 3 assignments, and my cash, I still had like 80, 90,000 in cash, but I had a margin call, and it was primarily because several of the other positions, if they were assigned to me, I wouldn't have had enough cash to cover all those assignments. But at the time, I believe I had around 80 or 90,000. So it was a little bit surprising. So one thing I did learn through this is be sure you have plenty of cash in your IRAs. Take a little bit less risk. Um, Also keep an eye on when you trade or you make a trade, there's always what's called intraday and overnight, how much cash you have, and it's your buying power. So keep an eye on that. Typically, when you do get a margin call, that those values go to zero or really low. So keep an eye on it. The goal is to have enough cash to cover all assignments at any time. So how did I get into that position? How did I get into the situation where I got a margin call? It's primarily because I had too many spreads just in my IRA. I didn't have many in my Roth. I didn't have many or any in either of my brokerages. So one thing to learn is take a little less risk in your retirement accounts. I don't do quite as many spreads. I'm going to start moving them around. So I'll do spreads in my brokerage. Both my brokerages also have been doing more in my Roth, as well as I'll still do some in my IRA, but I won't have as many. Some of the other things that I learned is don't just stagger your your spreads within your accounts, but also stagger by expiration. Um, and also stagger the type of spread you have and how much, how wide those spreads are. I have typically done $10 spreads, but in some cases, maybe $5 spreads make more sense. And pick different expirations. So instead of having, if you have more than 3 or 4 positions expiring in one account on one day, look at the next week or look at the next month. You just don't want too much expiring at the same time, mainly because if you get that kind of an event like we did in April, you're going to have lots and lots of assignments. Another important thing is to close at least 2 days before expiration. This is especially true if you have what's called a margin call. Your intraday and your overnight rates or amount of cash you have in the accounts, if it gets really low and you're on the day of expiration, the broker can potentially close that for a loss to get you out of that position. That did happen to me with one of my positions. So try to close within at least 2 days. I will let things expire, but this is kind of a unique situation. When you have a market correction like we did in April, it can make a big impact in a very short amount of time. So closing 2 days. I also go back to managing or encourage people to manage it 21 days out. If your position is 50, 60, 70% profitable, look at it. Does it make sense to close it? A lot of times I've closed positions that could have gotten me into trouble later on. I did close several spreads related to other chip makers like Qualcomm, Applied Materials, and a few others. I believe also Broadcom. Now, if I had still had those during that 2 weeks in April or 3 weeks in April, they also probably would have been assigned to me. So, so manage your trades, close them. We talk a lot about rolling. Just remember, rolling is just closing your current position and opening a new one. I've typically found that if you close a position, when the market's really high, especially puts, I'm talking more about puts here, and then open a new one, kind of have a delay in that roll, you can end up doing a lot better. So one thing I have not been really good on, and it's partially why April was pretty rough, is the fact that I don't close enough of the positions when I should. And I'm trying to make a better effort with that. But again, when you trade very part-time, sometimes you miss those opportunities. So when you're looking to make a trade and you're trying to make more income through a new trade, just remember, go back and look at a lot of your other trades, sort them by profitability and see who's fairly profitable. In a lot of cases, you may want to close 1 or 2 positions or maybe even more. Now, one thing I've talked about a lot, and I know some people hate spreads, but it did help me in this situation, which you'll see when I go over the trades, is by buying that long put, it gave me more choices. So when the market dove so much, a lot of those long puts were worth a lot. So I went a different means than a lot of people. I only had the one position that I took for a loss, and I think that was four. And that was kind of forced on me. I was getting ready to make the trade, and then I realized, wow, it's already been closed by Fidelity for, I think it was like a $3,500 loss. But by owning that long put, I have more choices. I can sell. In a lot of cases, I sold the long puts for a lot of money. It was quite surprising. Also, when I had 2 to 3 contracts and I would keep some, I might sell some. There were several instances where I had 3 contracts and I'd sell 100, keep 2 contracts, and then sell a covered call, and it worked out quite well. And again, you'll see that a lot more at the very end of the video when I go through the trades. So the purpose of this video is to kind of just to share with people you can still do really well even in your worst months. So I had a similar month in 22, but it was at that point I was trading a lot less. I think my goals were 4,000 on a monthly basis, and I had maybe a third to a half the number of trades that I currently have. So, and at that time I was trading more in my regular brokerage and less in my retirement. So the other big learning experience is you can trade in your IRAs, you can trade in your Roths, you can really generate a lot of premium and a lot of extra income, but be careful. You don't want to do too many spreads because you're very limited with what you can do. It's a lot harder to get cash into a retirement plan. You might be able to do a contribution, but you are limited. So try not to do as many spreads within IRAs or Roths. And that's what my plan is. I'm going to spread it around, like I talked about a minute ago, a lot more, and make trades in different places in both my brokerage accounts and my Roth. I've actually been doing more in my Roth lately, and it's worked out quite well. So that being said, let's jump into the next part of the video where I'll go over my trades and especially those 11 assignments that I had. I'll talk about each one of them and what I decided to do in each case, so stay tuned. Okay, now I've opened up my April spreadsheet. You'll notice that my trades are color coded. The green are new trades, so even during crazy April, I continued to make new trades. I also continued to close positions and open new ones. The main emphasis is don't stop trading. You may have a few early assignments, but if you go into the position or the trade wanting to own the stock and knowing it's a good company, then you're in a much better footing than, if you're trading positions you don't really want to own and you're just trying to earn premium. And that's been my case with a lot of the positions. Now, this planning worksheet I provide to my memberships. I release it every Sunday with updates. I also have sections in here for favorites, trade rankings, checklists, guidelines, goals. My membership is fairly straightforward. I have really 3 tiers right now. I have the Traders Club where you get access to the Discord. You get also Patreon access. You get all my spreadsheets. You get notifications for my trades. You also, on the Discord, there's a lot of people trading. Members are sharing each other's trades, asking questions, learning together as a group. My other two, I have a basic coaching, which you get two meetings with me, about 15 to 30 minutes. They're supposed to be 15 minutes, but they end up going more like 30 minutes. A lot of times it's because I just talk too much. You get 2 of those a month. And then I have a high end where somebody wants a lot more hand holding, where you get every week you get a 30-minute session with me, and we talk strategy. We talk, whatever you need help with. I've even coached people with helping them make trades and the right kind of trades. So might be something you're interested in. Take a look. Details will be in the description. It's a growing membership, growing slowly, which I prefer. I don't want to be overwhelmed. And I also don't force you into a phone call. It's not high pressure tactics. You can join for a month, leave the next month, come back the month after. I just want people to have a place they can go and they can share ideas with other people. and not have a lot of pressure. I have some members that are probably better traders than I am. So just wanted to share that. So in my spreadsheet, my first trade, and I'm breaking this down by day. So my first trade was Academy Sports, and it was a covered call. Academy Sports the previous month had gotten assigned to me. Then I closed a Zoom trade, so a covered call. Um, what one beauty with a crazy down market like we had in early April is a lot of your covered calls will become very profitable. So whenever we go through these kind of situations, be sure to check your covered calls. A lot of times it's really worth closing them because when we do rebound, and we always rebound, then you have more opportunity to do really well on the covered call side. Agilient, a it was assigned to me vertical put credit spread. It was 135, 120. I had rolled it in, I believe, in February, March. It really started to come down. At this point, it was 106. So my short was 135. So you can see it was very deep in the money. Um, and then it was assigned to me. So I sold the three long puts, made over $2,000. My cost basis after selling those, plus the premium I had already made, plus I sold covered calls, ended up being right around 117. And now I believe they're over 120. So it worked out well. But it was a lot of cash. 300 shares being assigned was over 40,000. And then here you can see the covered call. I closed it early. Um, so I set it up and I was able to close it pretty quickly because the market kept heading lower. Then a new Schwab covered call trade. I'm not going to go into detail with some of these new trades. Polaris, another trade covered call that I closed. I was able to close quite a few covered calls. And then STX, and this is one where it kind of got me on both sides. It shot through the roof after getting assigned to me, and now I'm deep in covered calls. The trade is profitable, but I'm probably going to let it get called away from me because I've tried to roll and I can't. But it was 95.85 at the time. It dropped all the way to 82, so pretty significantly deep in the money. And then with this one, I sold the three long puts, made some really good premium, 56.73. I also had made some good premium selling puts. And then my cost basis for it is 71.91. Now recently Seagate, STX is Seagate, it shot through the roof. It's like 126 now. So when you go through these V-shaped recoveries, be careful with the covered calls because they can go deep in the money rapidly with, Seagate hit new highs. I mean, it keeps hitting new highs. I do think it's overbought now, and it will probably come down a bit. And I might get back into it if it comes down enough. Now, AMD, this was a covered call that expired. um, so I also will, if they're way out of the money, I'll let them expire. Since AMD also had been hit, it was $96 at the time. I wish I had bought more. AAL, which is American Airlines, I rolled it. This is my wheel trades all did fairly well during this process. I had all but one in my three different accounts, which was my spread account. I did have some assignments, but I was expecting the assignments, and they actually stayed fairly close to the money. So I had some that got like Pinterest, that got assigned away from me, or no, assigned to me and then away from me. And I probably will have that again. Fiverr is another one that I've been rolling. It's another wheel trade. Um, I won't go into the specifics, but I'm still wheeling it. I've recently brought it up to 30. It's not been assigned to me. Nvidia, this is another covered call that I rolled. I believe I rolled it down. Yeah, I rolled it down because Nvidia had dropped down to 111. So a lot of times with my 200 shares of Nvidia, I literally just roll it up and down and bring in hundreds of dollars. It works out quite well for this one. Let's look at NVIDIA. How much did I bring in? Just rolling it down by $528. And it's in my brokerage, so that's cash I could spend. Zoom, I close another Zoom trade. Again, when the market is kind of causing problems on the downside, covered calls become very profitable very quickly. IWM, these never got assigned to me. So 185, 175, it was 194. I believe it got right close, like 186, but then it rebounded. And then I rolled it and made some more cash. So here's a few more assignments. Micron got assigned to me. It was 95.80. Originally, it was a 21 Delta. It dropped all the way to 79. And now where is it? I believe it's over 110. It might be like 115 currently. But I sold the long puts again. It's worked out quite well to do that. Plus, I did a covered call, and because of that, my cost basis is right around 71.31. One thing I've kind of learned recently is if you do get something deep in the money as a covered call, it might make more sense just to let it get called away and then put your money elsewhere versus tying it up for a long period of time, depending on when your expiration is. Now, Mara also got assigned to me. This was in my brokerage account, and I had a 1610. So this one was profitable as soon as it got assigned to me. And now it's been very profitable with covered calls. So it's, yeah, I believe my cost basis is around 14. So it's worked out quite well. Mara is one of the exceptions. At times it looks like it's not making money, but it's because it deals in Bitcoin. It's my foray into Bitcoin. It's how I'm trying to learn about Bitcoin. But it's worked out really well. I've made some pretty good cash with trading Mara. Next is NVIDIA. This was another roll, a vertical put credit spread. I had it 110, 100. I still have this one and I'm continuing to roll it. And it typically brings in pretty good cash. This one a little less. So I rolled it to get it a little bit out of the way. I didn't want to take a chance of it getting assigned to me. Then a new covered call on Mara at 13. At the time, Mara was what's showing 1430, but I think it was lower than that. Then SoFi. The Schwab broker one Mara is another wheel trade. This SoFi is also a wheel trade. Again, my wheel trades all worked out quite well during April. And then I rolled it, made some pretty good premium. I've talked about my SoFi trades in my option wheel spreadsheet, and it's worked out quite well. I really like it in this 12, $12, $13, $14 range. Google also got assigned to me, and it was 3 contracts at 170 and 155 is 163 at the time. I believe it might have gotten down pretty close to that 155. So let's see what I did. So I sold the long puts and I sold 100 shares and I sold covered calls. And my cost basis was right around 165. And now they're, I believe, 175. Almost every position that I've rolled or not rolled, it's been a sign that I kept some of the shares have shot up quite a bit. Google is probably one of the least. It hasn't shot up as much as a lot of the others. So now we're already in April 14th. Here's a covered call and Seagate. It was for 85. It was 82.70. Like I said, it shot up to 126. I believe I got some pretty good premium with this. Yeah, almost $459. I should have gone farther out, and I probably should have gone up to like 110, 120. And then FCX, another wheel type trade, and it's never been assigned to me. I just keep wheeling it. I actually do want some of the shares and own some of the shares. It brings in fairly good premium too, and I think the company's going to do really well with onshoring a lot of the mineral mining. This is the one that got assigned to me, and this is the one loss that I had. So paid to close for a loss, decided to bail on them. And I took a 37.58 loss on it. Now, this one was a little bit unique. I was going to try to roll it again, and it was like 2 or 3 o'clock on a Friday, and it actually got closed by Fidelity. I suddenly went to look at it, wanted to roll, and it had already been closed. So they will do that, and Schwab will also do that. Um, Another reason why I say don't wait till the expiration day, do it a couple days before. But that month was crazy. Every day I was trying to deal with the cash and maintain some pretty good cash. So now we're 4:15. Things were beginning to turn around. I was able to roll Mara. I closed more Zoom. And then I did have a couple more assignments. Best Buy got assigned to me. Sold the long puts and ran covered calls. Cost basis 68.15. Um, right now it's like in the mid 70s, and it's definitely been hit by the tariffs. They're going to have some inventory issues probably late this month and next month. And it seems to be trading in the 68 to 74 range. And I like Best Buy. I do think long term they're going to be fine. NetApp is another one that got assigned to me. Now we're at 416. We're coming that the market hit really low. I think it was in April, but then it recovered some. And then let's see what I did with NetApp. It was 90.80. The stock was 88. Um, so it was, I think it got lower than 88. 88 was the price on Sunday when I set up the spreadsheet. I think it got down to like 82, and then sold the long puts, sold 100 shares, and then sold the covered calls. Cost basis 86. So a lot of times I did have to sell it, part of the shares that were assigned to me. So in this case, I only kept, I believe, I kept only 100 shares. XLK, another one that got assigned to me. This is the ETF that kind of mirrors the QQQ. It was 215, 205. Made some pretty good premium as I was trading it for puts. And then it got assigned to me. Again, sold the long puts, sold 100 shares, and then sold some covered calls. Cost basis is 207. CLS, another one that got assigned to me, another one that shot through the roof when it recovered. I was 417, so we were kind of turning around a bit in the market. I believe this is around the time things really started to turn around. 92.7, 77.50, the price was 89. Again, I believe it was a little bit lower than 89. We hit all-time lows or recent lows, and then we popped a little bit, but then we dropped back partially. But for this assignment, I sold the long puts again, sold 100 shares, and then sold the covered calls, and cost basis is currently 81. This is another one that has such good premium. I am able to continue to roll it up with my covered calls, but they're fairly deep in the money. A good number of my covered calls are deep in the money. Another Mara got assigned. This one was in my Roth. 1910, it was 14 at the time. And then I sold the long puts. Sound familiar? Sold the covered calls. The cost basis 12.12. So selling covered calls on it is really profitable. If I didn't already own 400 or 500 shares, and then I currently still have a vertical put credit spread with them, I'd probably look at doing more trades on them, and I might still. When you look at the amount of Bitcoin that they have, it's almost about the same price as their market value. Polaris, I still own Polaris in my brokerage, and I've been selling covered calls on it, trying to, in a way, get called away. I may bail on Polaris and maybe come back down the road. I did like them a lot, but I brought in 382. Um, and I'm lowering my loss. I think at one point I had a 50% loss. It might be, or it might have been a 60% loss, and now it's like 50. Mara, this is a covered call related to the shares of my Roth account. And I believe I've done a couple of covered calls on this. So, and the premium with Mara on the call side is also really good, 217. Now we're at 421. Things are turning around. Micron, I roll a covered call, bring in some more premium. If we come over here, you can see 417. So, and then same thing with CLS. I did a new covered call on it. I did wait a little bit, but let it recover some. Brought in 354. Dell, which this is a cash secured put, and I still have it. It was so deep in the money at one point, I was shocked it never got called away from me. Like here, you can see it was 94.90. and it still didn't get called away. I believe it's right now pretty close to 115. It might be like 114. Um, and I earned a lot. I mean, I've earned over 4,000 in trading this cash secured put. This time I made 327. Um, and I'm just kind of running through these quickly. AMD, I did get assigned 200 shares. I believe it was the previous month. So just, but I also have another cash secured put. Now this one is nearly out of the money too. When I started trading AMD, it was right around 150. I think it's going to be back to 150 pretty soon here. At this point, it was 96.65, and I rolled it and brought in 300 in premium, and then I did another covered call in Google, covered call in NetApp, covered call on Best Buy, and all three of those I brought in some pretty good premium: 264, 249, 245, all pretty close to 250 range, and they all had fairly good yearly ROIs, for a covered call. Um, NVIDIA, I rolled it again. This is a vertical put credit spread, 117, 107. Did I clean this one up? No, I widened it so I could roll it. I actually paid a little bit too. So I rolled this out to 5.9 to buy myself a little bit more time. And I believe I was able to, that position did not get assigned to me. But now looking back, maybe I should have let it get assigned to me because they're over 142. Intel also continues to be hammered. I've just continued to trade covered calls on it and bring in some extra premium. Now we're at 428. So Zoom, I rolled another covered call in Zoom. Zoom shot up to like 84. Now it's like 78, 79. So it's in that trading area I really like. Agilent, I can never say that correctly, rolled it 120 and brought in some pretty good premium at 120. Of my technology stocks, it's probably my least favorite. So I am being a little bit more aggressive with the covered calls. I'm fine if they get called away. Next is another wheel trade, Bluebird. And I rolled it and brought in, I think, some pretty good premium, 177. Then I did another CLS, vertical put credit spread, that's in my Roth. I did a 75.65. So market hit so low, and I felt like that was crazy if I could pick up CLS at that price range. But at this point, I had recovered quite a bit. I no longer had margin calls. Everything was fairly clean. And then Seagate, I rolled the covered call at 82.70, but again, it shot up. It's over 126 currently. And now, if I look at the overall month, I brought in some pretty good premiums. I brought in the Schwab brokerage almost 0.77%, which is higher than usual. And that's 33.66. Fidelity IRA right around 1.09%. And then Fidelity Roth right around 0.86. So it's pretty close to like 0.9 or something. Total premium 83.69. Now with all these assignments, if I hadn't kept trading, it would have been really ugly. And I still made some good dividend and interest. So my total cash and earnings 11,758. And then total portfolio value 911. These are just notes. I had too many spreads expiring close together. Need to stagger them better. I concentrated too many puts in a single account. I placed too many puts in my retirement account. Also good with, no, better to spread them across accounts. Long puts were effective when rolling down and out. Also good with selling to lower cost basis. In a better situation, I like to have 1 to 2 positions get assigned to me on a monthly basis at most, maybe 3 or 4 on occasion. But yeah, 11 was a little bit crazy. The account recovered well despite the volatility. If you hang on another minute, I'll show you what those accounts look like now. I stayed consistent with my strategy and didn't stop trading. I managed a margin call. I had the cash, but my intraday buying power was limited, and it kept increasing, and it's still increasing. So I'm keeping more cash. To me, trading options is like extra icing on the cake. I'm not trying to get rich. When I originally had someone managing my accounts, I had a financial planner or advisor, and he was charging 1%. And when I looked in detail what kind of returns I was getting like between 4 and 8%. And then when I started doing it myself, I was getting at first more like 8 to 12. Now it's like 12 to 16% on average that I'm getting, and I usually come really close to um, matching the S&P 500. So let's jump into that really quick. The next section, I'll show you how those accounts currently. Okay, now I'm not going to take a lot of time with this, but this is what my accounts look like. I screenshotted this yesterday. My rollover, it's had, if you go back for a year, 13.31. The S&P 500 was 14.17. Um, so I'm again really close in that account. It also is pretty near. Well, it's at an all-time high compared. I believe before we had the market downturn, it might have been in early January. My accounts were like 439, 438, something like that. Now it hit 442, 576, which is at the top of the screen. You can see right here. And then if I go to my Roth account, it's done even better. So, and I've done a bit more trading with it, but 16.27. So a little bit better. I don't know why the S&P 500 shows, was it 14? No, it was 14.17. So I did better than the S&P 500 in this account. And I do talk about in other videos that the smaller the account, it's a little bit easier to get the higher returns. Once you're mostly invested in some of the bigger accounts, like accounts over 150 to 200,000. This other account is 476. It's a little bit harder to earn or to make really big returns, mainly because if you have a lot of positions, some positions will do well, others, they might have a bad month or something. Most stocks don't stay at the same price. Some months look good, like Coca-Cola. So it at times has gotten really high, like especially during this correction, gotten into pretty close to an all-time high. And then with the recovery and the market doing well, it's kind of floundered a bit. It's right around 70, 71. At one point, when the market really took off, late April, I believe it dropped to like 67, 68. So none of these stocks stay the same. If you own a lot of ETFs and stocks, they're going to move around a bit. And so you may, your returns may look a little bit lower, but overall, you're still bringing in a lot of cash. I mean, between my dividends, my interest, and in these premiums, it's fairly significant. So that's what I wanted to share with you guys. If I missed anything or you're not quite sure about something I went over, please leave a comment. I try to answer most of my comments, especially about margin calls. I don't know that I dug deep enough into those, but you definitely can recover. What I've learned, I'm already making changes. I'm not going to be doing so many spreads in my retirement accounts. I'm going to spread it around to many more accounts. I'm also going to get back to spreading out my expirations. I got a little bit away from that. But that's what I wanted to share with you guys. Thanks again for taking the time to watch, and hope you have a wonderful Father's Day.